Shares of Travel and Leisure are down after their earnings this morning, only about 2%. The world's largest timeshare operator beat on the top and bottom lines, but lowered fourth quarter and full year guidance. A highlight was its vacation ownership business that saw an 8% year-on-year jump, which it says is also recession-proof because of its prepaid model. In fact, 80% of its customers have fully paid for their timeshares, with the large majority of new buyers being millennials and Gen X. Joining me in an exclusive interview is Michael Brown, President and CEO of Travel and Leisure Co. Michael, it's good to see you again. Welcome.
Great to be back on your show. Thanks.
When you say, I'm not that familiar, I have to confess, with the timeshare business. When you say they fully paid, how big a price tag do these units have?
Usually the average transaction for vacation that's in perpetuity is between $20,000 and $25,000. So when we say people have fully paid for their ownership, when they're deciding to go on vacation this year, they're only paying their annual maintenance fee, which is on average about $1,000. So at a time when inflation's high and hotel rooms are at all-time high rates, people have already paid for it. So the decision to go on vacation, which gets to your point of being resilient and recession-proof, they're going to go on vacation because they've already paid for it years ago.
And where are the most popular places, both in general and for some of your younger customers?
Well, things have changed pretty dramatically in the last 2 years. 22 was the year of revenge travel, where people were going anywhere and everywhere, short-term and mid-haul, short-haul and mid-haul. This year in the summer, we saw a return to long-haul vacations where people had not traveled for many years until prior to COVID. Cruises were big. Europe was big. And what we're seeing is a normalization back to U.S. travel. And I'd expect to see that, a lot of U.S. travel in 2024. As for our millennials and especially Gen Xers, we're seeing a lot of urban travels. Our most recent resorts have opened in Portland, Austin, Texas, Nashville, Tennessee, and our newest resort is in downtown Atlanta overlooking Centennial Park. So urban destinations for quick getaways are super popular these days.
That's really surprising. I mean, not least because places like Portland have had some challenges with, law and order in recent years. And who's going to downtown Atlanta for a vacation?
Well, oddly enough, the way people are vacation today, they're looking for short getaways, but they're also looking to leverage multiple destinations. So we are very prominent in Myrtle Beach, South Carolina. The panhandle of Florida is super popular. Orlando, Central Florida, where we're based, is returning with a lot of strength in late 23 and in 24. So what you'll often get is a visit to downtown Atlanta, enjoy a lot of the cuisine or a lot of the great museums like the Georgia Aquarium or the College Football Museum for 2 days, 3 days, and then they'll pop across to a beach and enjoy a longer vacation. So it's just variety and diversification of the experiences. And, downtown Austin, Texas, that's where Formula One was this past weekend.
True.
So people are getting to urban destinations. And, of course, I didn't even mention New York City, where people are year-round.
Yeah, we just showed your price-to-earnings multiple. It's 6, which is, quite low and probably suggests people's concern about the macro environment, a little bit of what you're describing going into next year. So
That's right.
If you look at those trends and that consumer behavior, I can understand, okay, it's $1,000 to go on vacation. You have to get those plane tickets. That might still be an item that people have to drop if budgets are getting a little tight.
Well, I think a few things. Let me just talk. Price to earnings multiple reflects a lot of uncertainty that investors have of where the economy is going and where interest rates are going. That doesn't change our underlying business. You said it in the intro, 5 to 7% total growth this year, with our core vacation ownership business being much higher than that. What we see from our consumers, though, is if the price of airfare becomes a concern and you're living in Pennsylvania, you're going to change your vacation, get in a car and drive to D.C. and enjoy the museums, or drive down to Myrtle Beach and enjoy the beach, or further south like Orlando, Disney. So our consumers modify their behavior. They don't stop going on vacation.